Hello everyone, I'm Bogdan, and today we're going to talk about Thursdays, what it is, how to use it correctly, and why it's one of the best elements in my night star trading strategy. I hope you've already seen my previous videos on the market structure, how to use it correctly, because it will be very useful to you today. So, Thursdays is a GAN box tool that you pull either from maximum to minimum or from minimum to maximum, depending on your trend. Today we're going to look at the example of rising movements. We see that the price is forming maximum-minimum. There is an impulsive movement. This is a range in which the nature of the price movement is the most favorable for the opening of positions, for the search of positions. We see that the price confirms the maximum here because it removes this inducement. Next, it makes a boss here and confirms this minimum here. Next, we need to find a new maximum for this minimum. It is confirmed in this place. Why? Because the price removes this inducement, it goes down, and it removes it. Now we have a trading range from this minimum to this maximum. And how do we understand that this range will be traded? Either the price will go away from any zone of interest, the zone of buy, because we have two blocks in the impulse. For example, the first is post-inducement, and the second is extreme. It may not reach the block, or it may come, touch, punch, and then go up. Or it can take 0.5. But how to understand where this 0.5 range to trade? To do this, we need a quarter of the GAN box. We stretch the GAN box from the minimum to the maximum. And we are interested in the following areas in this range on this tool. This is the second quarter zone. We will trade from it. This is the zone where the price is most often turned around. And, for example, the 0.5 zone. Of course, there are other zones. This is, for example, the extreme zone, the extreme quarter. But today, we will not talk about it. We are interested in the second quarter. About 0.5, you all know. This is the 0.5 trading range. To make it effective, balanced, and so on. Let's go back to the second quarter zone. What is this zone? This is the zone where the price is most often working on its setup. Namely, the removal of the inducement and 2 bites on sale. I literally had a video on this topic in the past. About Mirage setup. The price removes the inducement, makes the first wave of sales, adjustment, then the second wave of sales, to attract traders to the sale. That is, they open such positions. Let's say short, with some goals, for example. But what happens in the end? She tests the zone of the second quarter, goes up, updates this maximum, and confirms this minimum in this place. How not to get caught in this trap? Everything is very simple. We are interested in a specific second quarter area. This is not some specific order block, or order flow, or imbalance. This is just an area that can shift. If we will pull the grid to the next new maximum, there is also a very interesting moment with weak points of oscillation. For example, when the price does not trade 0.5 range, goes ahead, makes a high update, confirms the minimum. In fact, she did not update 0.5. Therefore, this LOI will be weak. And when the price confirms a new maximum, for example, somewhere in this place, after removing the inducement, we will not pull the new grid from this minimum, from this maximum, because we will tighten it, since we have not traded the previous range yet. And as a rule, this weak minimum, it will coincide with the average value of the range. That is, it's 0.5. And the price can go down to it, remove, balance the range, and then go up. This will be considered a fake. That is, a fake false break. As a rule, this is the inducement of the old time frame. I had a lot of questions. On M15, for example, we have a situation to remove the inducement. There is a confirmed maximum. And on the watch time frame, only adjustment. That is inducement. On the watch, it will remove the inducement. We have to actually sell. And on M15, it will be a break. And what should we do next? Sell or buy? And just such a grid with quarters solves this very interesting question. further. How can we trade from the second quarter? In principle, everything is very simple. We can also break it into quarters. We will also be interested in the second quarter. That is, this is a specified area. We will not break them more. This is not necessary, and this is wrong. We are just interested in this specific area. It is also very important that the price, when it comes to this quarter, it tested the specified area and went up. It either goes from the first quarter or from the second. If it goes below 0.5 of the second quarter, this is an undesirable movement, and the price here is already reduced. Because it can work out the movement up, it can completely invalidate the second quarter and continue to move down. Therefore, ideally, if you want to consider buying positions, you trade from the second specified area. Here is the setup and the entrance to the purchase before updating this maximum. Let's look at a real example. For example, I have a very good chart here. This is SUI USDT. We see a clear structure. There is a confirmed maximum here. This is the point of oscillation. It is confirmed because the price went down here. It removed this inducement. It also removed this liquidity pool. Here in this place, this is very good because we have no liquidity left. Therefore, the price should not go below. It also affected this order flow. Formed a very good, strong trend. I really like it. Next, it made a boss here. The rupture of the structure in the continuation of the rising trend. In this case, and confirmed this minimum. Now we are looking for a confirmation of a new maximum. We see that it is confirmed in this place, because the price removes this inducement here. But if we draw a quarter here, we see that the price did not take 0.5 here. Therefore, the minimum that is confirmed here after the boss, it makes a new boss. And, of course, confirms this minimum. This minimum will be weak. And in the future, the price can easily remove it and go up. And this will not be considered a true rupture of the structure. Change in the nature of the trend. We see that here the price touched the second quarter. And what is very important, this is that it did not go below 0.5. It affected the specified area, from which, subsequently, the position could be opened for purchase. What do we do next? We are looking for a new maximum for this minimum. It is confirmed right here, because the price went down and removed this inducement. It removed it and confirmed this maximum. Now these quarters, we can reach a new maximum because we will not pull new. Why? Because here, the range was not traded. Now our second quarter shifted. 0.5 shifted as well. In fact, now this minimum is very liquid. The price can easily remove it, but it is very far from it. Plus, it is below 0.5 of the main range, and below the second quarter. And to remove this minimum, I have to invalidate and break through the second quarter. And this does not interest us. We want to buy further. We can split this second quarter into more specific areas, more small quarters, select the second quarter, and wait for a reaction from it. We look at what it does. It goes down below. It makes a wave of purchases in order to attract people to open positions in the long after, which the price removes them, makes a beautiful resweep here, touches the zones. We see an absorption here, and ideally, it was necessary to open in this place by closing the candle. And we see the goal of updating this maximum, that is, its boss, and we see the further consequences of the work of this position. The most ideal logic, nothing super complex. I also want you to pay attention to the nature of the movement within this range. From this minimum to this maximum. From this minimum to this maximum, the range is quite impulsive and very pleasant. If you use quarters in other ranges, some more traded, where the movement is not so impulsive, we have a maximum. Here will be a new point of oscillation. This is a great example. And a bad example is when the price does something like this. In fact, we can also have a confirmed point of oscillation here, but this range is wrong because if we are here, we will pull trading quarters. Then the price, first of all, our inducement is too low. Below 0.5 range plus the range itself is already effective. Here, every impulse is traded. Therefore, the price can simply be broken and invalidated. It will not continue to move up in any way. Therefore, trade exactly these ranges. Thank you all very much for watching. Like, subscribe to the channel, write comments. Good luck to everyone, and bye.